Stock markets by nature are heavily influenced by both domestic and international events. There's no surprise then that the market participants are now eagerly awaiting the June 4th outcome of the general elections here in India, which will give markets their purpose and direction. Exit polls have already shown a resounding majority for the BJP-led NDA government. Going by what we saw on 3rd May, where Indian markets touched a new all-time high by just reacting to those exit polls. Word on the street is that there will be a further rally which would be on expected line. Let me take you down memory lane then to see how much markets have reacted on result day in the past 5 elections. But before that, don't forget to like, share and subscribe to Moneycontrol for more such content. Now, in the past, markets have more often than not have been quite muted response on result day on the day of counting especially. Let's go back to 1999 where results were announced on 6th of October with the BJP-led NDA coming to power. The Sensex on that day was close to 4,948 levels, whereas the Nifty was just about 1,465. Both the Sensex and Nifty saw a 5.5% of gain on that day. The BJP won with just about 182 seats, and in the NDA took that count to 270. Moving on to 2004 when the results were declared on May 13th. But we saw the markets reacting on May 14th with the Nifty and Sensex slumping in trade, falling by about 7.87% and 6.10% respectively. Indian National Congress was the one that came to power with the UPA winning about 218 seats. The crash could be attributed to the unexpected victory of the Congress-led UPA, defying expectations of most analysts. The market also went further down over the next few trading days as it became clearer that the newly formed coalition government would be supported by the left parties as well. Now, in 2009, results were declared on May 16th, which was a market holiday, and hence we saw the Indian benchmark indices reacting on the results outcome on May 18th. Both traders and investors had enough time then to digest the news. The UPA retained power and showed a strength of 262 out of the 543 seats, while the Nifty and Sensex both surged to such an extent, hitting an upper circuit breaker, and that trading had to be stopped mid-session because of that. Nonetheless, we saw the Nifty gaining about 17.74% to close in at 4,323.15 levels on that day, whereas the Sensex soared as much as 14,284. Let's move on to 2014, where we saw the BJP-led NDA come back to power on May 16th. The NDA got a total of 336 seats, with the Narendra Modi government taking charge as Prime Minister. Markets were quite volatile that day, with the benchmarks barely witnessing any much swings. The Nifty gained about 1.1%, closing in at 7,203 levels, whereas it was the Sensex which was rather flat at just about 0.90%, gaining to about 24,121 levels. Finally, let's take a look at 2019, where the markets took a dip on results day. Many say that this could be because the BJP-led NDA government's victory was already factored in by the market, and there was weakness in the larger economic fundamentals, which led to investors booking profits, leading to that overall fall in the market prices. The BJP won with a thumping 303 seats, but the Nifty slipped by 0.69%, while the Sensex closed at 38,811 or 0.76% lower. The only other similar instance where the markets dipped the year after the 2019 elections was in 2020 due to the COVID-19 pandemic, which resulted in the crash of markets across the world. Now, from those 11,600 levels that we were on in 2019 to the 23,200 odd levels that we are hovering around today, the markets have seen some interesting swings and a whole lot of volatility. All eyes are now fixed on June 4th, the election outcome that will give markets their much needed momentum.